I can't do a video. I haven't shaved in like 3 days. Oh, hey everyone, Clayton here. I hope to heck that you're staying safe and trying to avoid all the conspiracy theories out there. I know the world has gone crazy in the middle of this crisis. Italians are singing from their balconies while on a lockdown. A hamster is on TikTok giving out health advice, and a woman is shopping at Costco wearing a snorkel and face mask.
Oh my God, this woman is walking around Costco in her snorkeling mask. People have lost their minds.
The Dow dropped another 3,000 points last night.
Second worst day ever, with the Dow plunging nearly 3,000 points.
The stock market saw one of its worst days in years Monday. Worries about inflation and interest rates sent investors running for the doors.
What I really want to emphasize is this has been a bad 2 days. 8.5% in 2 days is a real day.
There are many industries that are truly on the ropes here, and I expect them to remain on the ropes for a long time, unless they fall flat on the canvas.
We've all lost our collective minds. But when it comes to our investments, we can't lose our heads. And my portfolio right now is doing just fine, and it will continue to do so. So I want to help you build a nearly recession-proof investing strategy, especially if you're just starting out. Because if you lay this groundwork now, you won't have to worry about the stock market plummeting 3,000 points or a woman in a snorkel buying toilet paper at Costco. First, I want to get this out of the way because whenever I post about how I'm doing just fine with real estate, I get a lot of people saying, yeah, but when stocks go down, that'll affect real estate. Don't you remember 2008? But these people don't own real estate and they don't know what they're talking about. So bottom line, it's totally incorrect. And by the way, the data shows that drops in the stock market have almost no effect on home prices. In fact, home prices right now during this crisis are right where they were before this woman started wearing a snorkel at Costco.
People have lost their minds.
What's important to remember about real estate is there is no such thing as one real estate market. Remember that what happens in crazy California, the least landlord-friendly state in the country, a place I'd never invest, has no relationship to Texas or Tennessee, places I do invest.
Don't mess with Texas.
When people want to wax poetic about what happened in 2008, people say, remember the housing collapse and the bubble, as if there was one giant bubble that burst. It didn't. In fact, people who invested in places that I teach them to invest did just fine, and they saw virtually no dip in their value or their rent from their tenants. People that had overpriced high-rise condos in Miami got hurt, but those aren't the places I invest. So what I'm saying is that real estate will always be driven by location, location, location. And I know it's a cliche at this point, but guess what? Cliches are always rooted in truth because housing prices and vacancy rates are driven by employment, supply and demand, crime rates, etc. Side note, also what these fans of reminding us about the 2008 collapse forget is that I don't care about real estate values. I care about cash flow. So if the value of my rental property goes down a little bit, I don't care because the tenant is still paying me rent. I get the tax benefits of the property. I'm holding this property for the rest of my life. So if I bought the duplex for $300,000 and it drops to $290,000 in value for a short period of time, doesn't do anything to me at all. Why? Because the two tenants on either side of this duplex are still paying me $3,000 a month in cash flow. And in 2 years, when that duplex is now valued at $320,000, I also don't care too much. Also, another point about 2008, that anybody with a pulse could get a mortgage on an overpriced house. Many people didn't even have jobs and could get these mortgages. Those were called ninja loans. Ninja loans were no income, no job. Now, I don't know if you're following the data here, but today it's very hard to get a mortgage and the foreclosure rate has plummeted. That means 2008 is not like 2020. All right, side note over. All right, let's take an espresso break. All that karate really tired me out. And go ahead and hit that like button while you're taking a break. We've got a lot more to get to here. Oh, that's intense. Okay, break over. All right, back to real estate before we get to stocks. The next thing I want to mention about real estate, and this is for all of my realtor friends right now that are watching, real estate values are insanely influenced by mortgage rates. And I don't know if you saw the news lately, but the Federal Reserve cut rates twice in the last week. Now rates are at zero. Zero. When rates go this low, people buy houses, and that's exactly what's happening right now. I mean, we have a woman wearing a snorkel, and still people are buying homes.
People have lost their minds.
It's basically like getting free money from a bank to invest in. It's amazing. Why wouldn't you take a bank up on this leverage? Now let's talk about stocks. I have almost nothing in the stock market. I don't invest in paper assets, and here's why.
If you invest in S&P 500 index fund, you have to own the bad, the very bad, the disastrous, and a small group of easy to identify winners. Why own all the losers?
The stock market is built for Wall Street and day traders, not for the average investor. In the past week, entire 401k plans have been cut in half. I've gotten emails from people who told me they lost 75% of their portfolio and they want to start investing in real estate. I hear you, my friend. I did the same thing a number of years ago. The stocks that I do buy, though, are companies that we can't live without. It's just like my real estate strategy. People will always need a place to live, so I invest in real estate. With stocks, I'd invest in companies that supply us with goods and services that we can't live without. Also, invest in companies that can weather the coronavirus storm without any government help. The first thing I'd be checking is to look for companies that have a lot of cash that are going to be needed after the illness is conquered. The second thing that I would look for is to say, all right, which companies have good dividends and they have decent cash flows that I think can weather this storm and get through it. Side note, now I'm not telling you which stocks to buy, but I am using Apple as an example here. The government is not going to bail them out, and they don't need to be bailed out by anybody. They have over $400 billion in the bank saved. They're the most profitable company in the world. I think they're going to be okay. And guess what? I'm pretty sure I'm going to be buying a new iPad Pro when it comes out. There was some leaked code just today about that, and I know that the new iPad Pro is coming soon. So I'm going to get that and probably a new Apple Watch. All right, side note over. So where do stocks go from here? I don't know, and no one does. Yesterday, though, one of those circuit breakers tripped again on Wall Street. It halted trading because the Dow dropped like a rock. And frankly, I think it's pretty darn fishy, don't you? It seems pretty rigged for Wall Street. One day it drops 1,700 points, the next day it's up 1,800 points, then it goes down 3,000 points, then it's back up. Something as fishy as hell to me.
Give me back that filet-o-fish. Give me that fish.
That's why I like investing in tangible assets. So, what I plan to do in 2020 and beyond is continue doing what works. I'm going to continue buying real estate. Yesterday, on the same day that the Dow dropped 3,000 points, I got a new tenant in one of my rental properties. That's the tale of two different asset classes. The property manager emailed us a new lease. The tenant is a nurse at the local hospital. Those are the types of tenants that live in my properties. They work stable jobs that are in high demand. Rents on my properties are very stable. And many of the properties that I have tenants in who have been there, they've been there over 5 years, and they're not going anywhere. And I'll also buy a little bit of stocks and gold and precious metals. That's what I'll do. But this makes up a very small portion of my portfolio. Also, I keep cash so that I can pounce on big deals when I see them. And also to have a little bit of a safety fund to protect myself if I need it. I keep that in a high interest savings account, and I have a link below to the account that I use with high interest savings. So that's it. That's my recession-proof plan. It's been tried and true for me, and I have no plans to do something drastic. I'm also not buying anything crazy like cryptocurrencies or speculative stocks.
Ooh, that's a bad one. That's like 2007. I know. Wish it weren't so.
We saw how that disaster went last week. I'd love to hear what your recession strategy is. Drop me a comment and subscribe. Also, if you do want to get one free stock valued up to $1,400 totally free, you can sign up for Webull, which will give you that free stock. It's like getting free money, even if you do nothing else with that account. And that link is below to grab your free stock right below. We'll see you next time, everyone. Ate próxima. Oh, that's intense. I can't do a video. I haven't shaved in like 3 days. Oh, hey. I can't do a video. I haven't shaved in like 3 days. Oh, hey.
Oh my God, this woman is walking around Costco in her snorkeling mask. People have lost their minds.